Do you want to save 20 to 30% of your building's yearly utility costs? Well, today's problem solved is brought to you by Parity, New York City's leading HVAC optimization service for condos and co-ops. Hundreds of property managers, board members, and resident managers trust Parity to improve their building's energy efficiency and save 5 to 6 figures on utility costs each year. To learn more, visit paritygo.com or email contact@paritygo.com.
Welcome to Problem Solved, a conversation about challenges facing New York co-op and condo board directors. I'm Emily Myers with Habitat Magazine, and I'm joined by Avi Zanjirian, partner at the auditing and accounting firm Czarnowski Beer. Avi, thanks so much for being here.
Thank you so much for having me.
So this episode takes a look at a co-op's tax filing error. We'll discuss what boards can do to make sure a building doesn't run into unnecessary violations or expenses. The good news is that some basic compliance preparation can save you a lot of time and money. So Avi, let's dive in with a look at the small Manhattan co-op that came to you with questions about their budget. What was their concern?
So they had just received their budget for the new year. As in most buildings, they're not happy with the increase that they were looking at, but they felt that it was significantly higher than they think it should have been. So they asked us to take a look at it as a second check. So we looked it over, and one of the things we noticed in real estate taxes in a co-op is its biggest expense. So we said, why did it go up so much from last year to this year? We understand there's increases, but that was a significant jump. So I took a look on New York City's website into the billing and realized that the building had previously received the co-op tax abatement and it had no longer been receiving it. So I knew that year there was a big change for the co-op abatement related to prevailing wages. So just to give a little background there, so the New York State changed the rule for the New York City abatement. And in order to qualify as a co-op to get the abatement, which is about 17.5%, there have been different variations over the years. We could go into them if we need to, that the building, if they were not paying prevailing wages to their employees, it wouldn't qualify for the abatement. So in order to do so, to qualify, you had to sign an affidavit and submit it. This building, the management company, was a smaller management company, wasn't aware of the filing, that wasn't aware they had to do the affidavit filing, so therefore it wasn't submitted. And New York City just took off. It was about a $60,000 abatement. So their new bill was $60,000 higher than it should have been.
So, I mean, that's a big amount of money for a small co-op to lose, technically. Were they able to recoup it?
I think after we identified the issue, which obviously helped them realize why the budget was projecting such a significant increase, they were able to submit the affidavit and get a retroactive fix of this. Obviously, you don't like to have to fork out extra money to New York City, especially on a smaller building who has a tighter budget, but they were able to get that recouped in the subsequent period.
Okay, so basically, if you don't pay prevailing wages to your employees as a co-op, you do lose that abatement. And it was simply down to the fact that they had not filed the correct paperwork. How had that fallen through the cracks?
My basic understanding is that there are new laws that come out each year, and not all of the, I would say, smaller outfits, I'm not trying to pick on them, but some of the smaller outfits were aware of it and knew it had to happen. So therefore, that's, I think, why it fell between the cracks.
So then what advice did you give the board sort of to take away, having used your services to figure out why the cost had increased?
So I mentioned to them that, once I realized that wasn't something was on their radar, I had mentioned a few other upcoming, what they call New York City local laws, that just wanted to make sure they were aware of them, and just said to them, someone either on the board level, if it's not going to be on the managing agent level, needs to be informed about what's going on in the industry, whether he's, sign up to, between the different platforms, between Habitat or other vendors, other magazines, that just to make sure they're getting alerts as to what's going on in the industry that they have to keep an eye out on.
So which compliance issues most commonly trip boards up?
I would say the newer ones. The ones they know about, they probably have it on record, or they understand they need to do it. There are ones that are coming up. Again, we could go into a few new ones that are coming up. It's usually the things that pop out of nowhere. And if they don't have a form of communication to get that information, they're not going to know about it.
Of course, some buildings are exempt from certain compliance issues.
Correct.
If, for example, I guess local law 97 is the emission caps, that is relevant for buildings above 25,000 square feet. And I believe there are also buildings that are exempt from filing for the abatement because they
With the
already.
affidavit, yes. With most of these compliance items, not everybody falls under the purview of having to comply. There's building size, building height, building structure, what's it made out of, how big it is, etc. I mean, it's all kind of the same thing. But when it came to the prevailing wage, the building, in order to have to comply with this prevailing wages, you had to have a building with valuations over a certain threshold. So in a different situation, we had another building who did know about it and called us and was like, we didn't know if we should do this. It's a big increase in our budget to go start paying prevailing wages. Most buildings that were union-based buildings were already paying prevailing wages. So there's a lot of buildings wasn't an issue for them. But some buildings, that weren't union or had one employee, is a smaller property. They were trying to make the decision: is the abatement, is it a larger credit? Then we're going to end up paying to these employees by increasing their salaries. So this building was one of them, was coming and saying, I don't know if it's worth it for us. So I said, hey, by the way, knowing they were in Brooklyn, what are your evaluations? And we looked it up. They actually weren't even subject to it because they were below the threshold. So we're happy that they're on top of the compliance issues, but they didn't even realize that this is something that doesn't even apply to them. Understanding what applies to you and what doesn't apply to you is also part two. It's understanding what's there, and then does it apply to me or not?
Yeah.
Is really the problem.
Because, of course, jumping through the hoops of compliance for something, it takes time and often money. And if you don't need to comply in the first place, that's going to be wasted time and money.
Absolutely. Especially when we know that all the board members are volunteers and they have other things, lives, jobs, family that they want to spend. They don't want to be wasting time doing it. Yes, absolutely.
So then what's your advice to boards in terms of, the takeaways from this example?
A lot of larger agents now, managing agents, will have a compliance department. The compliance sphere in New York City has become so big that most of these agents will have their own compliance departments to make sure that all of the different issues that apply to those buildings are being handled. Different filing requirements, etc. If you're with a smaller agent who may not have a compliance department, it's a conversation with the managing agent. Hey, can we make sure once a year we look through the different local laws or whatever other issues that are out there? Have we done everything? Is there a checklist? If the managing agent can't provide that, or the board has someone who is gung-ho and has the time to do it, maybe it's someone on the board who creates this checklist of things that we have to make sure we're filing for our FISP, for our facade, for the local law 84, for the benchmarking, for energy, for the energy assessments, making sure we're filing annually the affidavit for the prevailing wages, making sure all this stuff is happening. So there's some kind of checklist and form out there. That would be my recommendation.
And obviously you were able to save this building $60,000. What was the cost of your work for the board?
Oh, this we do a la carte. This maybe an hour or so of just reviewing the budget. It was our professional time, but this is something we're looking at and we understand. We audit about 215 co-ops and condos, so we see this coming up a lot. It's just part of our service.
Great. Well, fantastic advice for boards. That is Avi Zanjirian, partner at Czarnowski Beer.
Thank you, Emily.
If you're on a co-op or condo board, you understand how complex residential finances can be. That's where Cesarano & Kahn comes in. With decades of experience serving New York's co-op and condo communities, we provide flexible, adaptive audit services tailored to each property, along with seasoned tax services, transparent election tabulation, and strategic board advisory services. The result? Clear financial reporting, confident decision-making, and greater transparency for your organization. Trust the firm that understands the unique challenges of co-op and condo financial management. Visit ck-cpas.com to schedule your free consultation. Cesarano & Kahn and the specialized co-op and condo financial services done right.